I'm Kahler. Thanks for joining me. Over the years of writing these columns, I've tried to maintain a mix of topics that addresses both the technical aspects of investing or the technical aspects of financial planning, and then adding in the emotional component of our money behavior. I realized recently that despite of my love of numbers and history of geeking out over sharp ratios and asset class correlations, it's the emotional topics that really keep me engaged. When I started my financial advisory business over 40 years ago, hard to believe, the technical side of investing felt like rocket science. Back then, financial advisors spent countless hours crafting portfolios designed to beat the market. Each portfolio is a unique work of art. Clients hired us for our secret sauce of strategies that promised, though rarely delivered, market beating returns. A few decades later, it is a different world. Various studies, such as one I've quoted often from Dalbar, show that over a 20-year period, only 3% of all investors and advisors managed to outperform the market. As we moved into the 21st century, it became increasingly clear to many financial planning pioneers that trying to beat the market was not only difficult, but unnecessary. Investment advice was on its way to becoming a commodity. And today that shift has become a reality. Thanks to technology and the rise of passive investing, putting together a sophisticated, diversified portfolio has never been easier. Robo-advisors, low-cost exchange-traded funds, and online platforms have democratized access to tools that were once the domain of high-powered Wall Street types. Now, this is a win for the average investor. It's also made the role of a financial planner less about creating portfolios and more about holistic financial planning and understanding financial psychology. Now, don't get me wrong. Managing money and building portfolios is still an important job. It requires education and experience, a cool head, especially in volatile markets. The difference is that technology has streamlined the process, creating economies of scale that allow independent advisors to outsource portfolio management to specialized firms at a fraction of the cost that it was previously. What does this do? This frees up advisors to focus on what really matters. Having the vital, deep conversations with clients about their money and their life, the important conversations. These conversations are not about optimizing an investment portfolio. They're about navigating the messiness of life, the financial fallout of a divorce, or the emotional and financial toll of a health crisis, or maybe the decision to quit a stable job and chase a dream. They're about helping clients face the reality of their mortality, deciding when and how to transfer wealth to the next generation or give it away in meaningful ways. These moments require empathy, insight, and the ability to ask the right questions, none of which can be automated. No computer app or spreadsheet can meet this need. It's worth pausing to appreciate how far that we've come since the days when crafting a diversified portfolio required serious time and effort. Today, the same level of sophistication is available for a fraction of the cost and effort. Now that's real progress. It's also progress that as technology has made investing easier, It's also revealed something we didn't fully appreciate before. Wealth isn't just about the numbers. It's about financial, physical, and emotional well-being. Financial planning, life planning, and financial therapy bring well-being into all aspects of a client's life in a way that no other professions do. I'm not sure this human side of financial advising could have come into focus without the commoditization of investment advice. 40 years ago, my job was to outsmart the market. Now, my job is to help people outsmart themselves as I help clients overcome their fears, their biases, their emotional blind spots that block their path to richer and fulfilling lives. Thanks for joining me.